Hi, Claudia. Thank you so much for being on the show today.
Thank you for having me, Andrea. I'm really looking forward to the conversation.
I'm super excited to host you. And let's start with the beginning of your career in academia. So you jumped from investment banking to academia 15 years ago, and you started off by running an Asia Finance Center for INSEAD, top global business school, where you teach today. And we'll get to that later. And went on to build courses on corporate turnaround, risk management, private equity, and venture capital. You've also just won the Best Teacher of the Year award. Congratulations, as voted by the students, and are one of the best networked people in private capital space. With all that perspective and background, if you were to start a venture capital business today, how would you do it?
That's a really good question, because the model seems to be changing. Let me start maybe by saying how I would not do it. I would not do it like a lot of the crossover funds are doing it nowadays. So I would not build another tiger that has made the headlines recently. I'm rather a more traditionalist when it comes to venture capital, and firmly believe that venture capital investors need to engage very closely with the entrepreneur to ultimately build the best possible businesses out there. So they need to be there to help those entrepreneurs, support them, help them build the business. Then really venture capital becomes what Georges Doriot used to call true creative capital. And I believe that nowadays the new model of what I call spray and pray, a bit cynically, doesn't quite stack up to that. So I like the hands-on approach of venture capital. So I would build a team around me that has worked with entrepreneurs before, has entrepreneurial expertise, and really, really can relate to the entrepreneurs on the other side of the table.
That's interesting. Do you think that's still possible today? I mean, private markets and public markets have changed so much over the years, and there's a lot more participation, even in venture investing. So do you think that's still possible?
Yeah, I think it's possible. I mean, obviously, it also requires that you find the right entrepreneurs that basically see value in what you bring to the table. So you're absolutely right. I mean, we have nowadays more capital, more assets under management in venture capital as well as in private equity. We have more dry powder than we've ever had in the history of private capital markets. But what it also means that money or investable money is really not a differentiator anymore. What really is a differentiator is what you bring to the table as a venture capital investor. So what is your network? What is your value that you bring to the table? I appreciate that requires an educated entrepreneur, but I find that, when those two, venture capital ultimately still is a people business. And when that partnership works, when one-on-one will ultimately make significantly more than two.
That makes sense. Do you think, like when you look across the venture capital landscape globally, because you have such an amazing global perspective, how do you compare regions? Like, do you think, is the ecosystem developed to the same extent globally? Are there some regional differentiators you see? And are regions moving all in the same direction?
So clearly not. So as much as venture capital is often seen as a global asset class, which it ultimately is, that there are clear differences between the regions. So for example, when you just look at growth, we've seen Asia grow tremendously in the last 10 years, actually in terms of deals per year, as well as money deployed into early stage companies, overtaking Europe. So nowadays, you would look at the US as the number one, then Asia, and then ultimately Europe, and then basically the remaining emerging markets. So which is may come as a bit as a surprise, but really, I mean, Asia, particularly China, has really shown its colors when it comes to venture investing. Now, I'm talking about deploying venture capital. Obviously, when we look at exits, when we look at realized capital from an investor's point of view, the United States and there particularly both Silicon Valley as well as the East Coast clearly still stand out as the number one. So while it is a global business, and clearly there are differences between the individual regions. And there's really much to be said about. Different regions almost deserve a separate podcast to really describe it and do it justice. But it's really important as an entrepreneur to choose your location wisely. Because where you set up your business, obviously where you're targeting your original markets will ultimately drive the success of your future fundraising, should you want to continue to raise venture capital.
What's the most exciting region right now, in your view?
To be honest, I mean, every region is super exciting. The United States, I just came back from Silicon Valley, is super exciting, always has been, just because of the number of investors, the number of startups, and obviously the history that it's had. It usually, I like to go there to get a flavor of what is happening, what may be happening in the other regions going forward. I like Asia because Asia, obviously I've spent over 25 years here in Asia, so I can quite relate to it, because there are very distinct needs, very distinct demands from the markets. So the markets are quite different. People like to refer to Asia as a whole. And I always say there is no such thing as Asia. There's Southeast Asia, and even there are differences. Then there's India, which obviously comes with its own dynamic, and then China with its own ecosystem. I like Europe as well, because Europe obviously has fantastic entrepreneurs, has really deep tech, has a lot more B2B businesses that obviously don't make necessarily the headlines, are not the brand names that you find in the B2C side of venture capital investing.
So we drove right into the conversation, and I'm very excited to continue speaking about venture capital and private equity, and also learn about the amazing work you have done at INSEAD. But I wanted to circle back just for a little bit to the beginning of your career. I know you spent a lot of time in investment banking and alternative investing. So I'm wondering, how were those early days in investment banking? What key skills and lessons learned do you keep from those days? And how was the transition towards academia? I know it's a lot of questions, but we can take it in any order you prefer.
Okay, so let's start off with investment banking. I get this question quite a lot. So what I liked about investment banking was its kind of straight and direct nature. So it was very meritocratic. It was very honest. I should, for context, add, whilst I'm German, that I've really only spent 1 year of my whole career in Germany. So my early days were spent in the US, in New York. And I appreciated the opportunity that investment banking offered, opportunity to learn, and the opportunity also to be very clearly, allocated certain roles that really related to your skills. So I think finance in general is a good skill set to get under your belt early, because ultimately finance is the essence of business. It's the essence of economics, and so it's a good starting point for a young person as a career. What I also liked, that's a more personal note on it, I liked the fact that it allowed me to work in different countries around the world. So I went from Frankfurt to New York, to London, to Tokyo, to Hong Kong, to Singapore. And always there were different opportunities that gave me the option to basically transfer. And I was really appreciative, maybe not so much at the time, but when I look back, I think that really kind of shaped my view on the world. It gave me an insight very early on different cultures, not just cultures in the country, but also different business cultures. Moving from New York to Tokyo was a big a big difference, and quite an eye opener. I also learned, because being part of larger institutions, you learn very early on that it can become very political. And I think that's a good skill set to get under your belt as well. So, but ultimately, it's a good skill set to get under your belt. I'm quite grateful for the fact that I had fantastic bosses across my whole career that were always very supportive and kind of occasionally gave me a nudge to kind of dive in on the deep end as well of the pool.
So how did the change towards academia then come about?
Yeah, the change to academia, I get that question a lot as well. So I was invited to join INSEAD, so I can't really claim that it was my idea as much as I would love to, because in hindsight, it was one of the best career decisions I've made. So maybe a better question or a tweak to it would be what made me stay in academia. Initially, I made it very clear that I had joined only for 1 or 2 years, and I had very clear plans in the beginning to then make this just a small detour and then go back into investment banking. But what made me stay was to see to have the opportunity to be in a really, really entrepreneurial environment. And again, I mean, I've only been with INSEAD, so I don't have a lot of perspective on other schools, but maybe that's INSEAD specific. But it allowed me to build, to create, to fix, and basically start all my courses from scratch. I had colleagues that were very supportive on the work that I was doing, and basically gave me a really, really long leash. I also realized very quickly the moment I joined academia that I had all of a sudden become a very neutral counterpart for banks or financial counterparts to engage with. So that allowed me to have conversations that I would have not been able to have if I would have been at one or the other investment bank, which in turn also allowed me then to see things a little bit earlier, because you're right at the cutting edge. You're getting calls from institutions, you're getting calls from regulators as well. And I mean, just if I look today at kind of like, what does kind of like a day in the life of Claudia look like? So, I mean, I'm basically, I have students pitching to me on a regular basis, new business plans, opening my eyes to what's being discussed in a different generation, open my eyes to problems that may require solving. So one of those pitches more than a decade ago by now, was a group of students pitching to me impact investing. At the time, this was a very, very new concept. It had really not gained the kind of traction that it has gained nowadays. And just the fact that I'm all the time surrounded by almost kind of like crazy ideas is just, I think, a fantastic opportunity for me to do so, to stay at INSEAD. I should also say by now, after 16 years with INSEAD, I have quite a few students. I have several hundred students that by now are alumni that basically moved after my classes into venture capital, into private equity, or became entrepreneurs themselves. And they obviously stay in touch. And that allows me to kind of revisit my students and see what they have done, how they have evolved post-graduation. So it's almost kind of like a circular economy, even in my small space. So, and ultimately it goes from people to students to deals and to relationships that last for a very long time.
How did your focus on private equity and venture actually came to be? Were you focusing on those asset classes before?
In the beginning, I was not, but I think, to be honest, I mean, in the late 80s, early 90s, when private equity started off, I mean, we have to be quite honest, it was a cottage industry. No one in this wildest imagination would have ever thought that it would grow to the sizable economy that it is nowadays. And I had conversations with Henry Kravis around that, who basically confirmed that as well. So I think in the beginning, there was very little attention being paid to the private capital side. And we see that as well. You've seen in the last 10, 15 years, a lot more attention shifting towards private markets. Obviously, difficult to say what's cause and effect here, but obviously private markets started to deliver the returns that investors wanted to see. In turn, then investors started shifting more assets into private markets, making them a larger and larger player in the economy. To the point nowadays that we've seen more and more companies being delisted, more and more companies being taken private. And you start wondering whether public markets in potentially a decade from now will play the same role that they're playing nowadays. Or will the momentum, will the pendulum shift more and more towards private markets? That remains to be seen.
Both asset classes are very practical, right? And as you said, the developments have been maybe not dramatic, but there have been a lot of developments in both asset classes over the years. So I'm wondering, for someone who's teaching both asset classes, how do you marry this theoretical and practical approaches together? And also, how do you keep up with all the changes in each industry and make sure that what you teach is relevant and prepare students for whatever changes come next?
Yeah, I think that's a really important question, because obviously there's a difference of whether we're teaching PhDs, which is much more focused on the theory and the potential of models going forwards, versus MBAs, EMBAs, or Master in Management students. I like to really link my classes to the real life situations. So yes, I mean, there is the need for the foundations. I mean, that's where the academic rigor at a school like INSEAD comes in. But also in my classroom, ultimately, we want to prepare them to step out and be active, be positive players in the economy. And there, basically, it's important that that they, like I like to call it, hear from the horse's mouth. So the way I bring relevance into my classes is through my network of guest speakers. I have about 40 to 50 guest speakers a year that come through my classes. I mean, those are all senior, experienced investment professionals that share their experience with the students and obviously stand question and answer to them as well. And those discussions are always anchored around a case study that I've written with the protagonist, that I've written with the respective private equity or venture capital firm. And to me, this is really important. Otherwise, in a class with 100, 120 MBAs, you need an anchor that anchors the conversation. So we know whether we're talking about deal making, whether we're talking about leveraged buyouts in Europe, whether we're talking about growth equity investing in Indonesia, or whether we're talking about exits, or whether we're talking about impact investing. So the case study combined with a professional who comes in as a protagonist is really important.
It makes sense. So how do you keep up with all the changes, and how do you integrate those changes in your teaching material? I know you wrote your own textbook, which I guess serves as a support, but
which was kind of written out of frustration, because I was frustrated with the very often, lax language that was being used by professionals, by students, but also by the media out there. So I wanted something out there that was really, really clear in terms of language and in terms of explanation. Because I mean, to have a critical conversation, and I'm the first one to say that there's room for improvement in the private equity and venture capital space, but you need to have the same language, you need to have a baseline. And that's basically why I wrote my book. But you were asking a bit, how do I keep up with the changes? And absolutely, I mean, the industry is changing incredibly fast, especially I would say in the last 10, 15 years. It's probably changed faster than any other asset class. It certainly has grown larger than any other asset class, or faster. But I mean, I stay quite close to private equity firms, and I work quite closely with some venture capital firms as well. But I also stay close to the institutional investors, to the pension plans, to the endowment endowment plans, because ultimately they drive the direction, the behavior in the industry as well. So I think it's really, really important to understand, to kind of follow the money trail and see what are the investors thinking? What are their concerns? What do they like about private capital? So I am on advisory boards, which again is a privilege to be part of, and gives me a chance to ask questions and also to hear the concerns. But I also basically do quite a bit of research. So, for example, my research around China in venture capital that I did in 2018, together with a group of my of MBAs from China, is considered cutting edge, and basically ultimately then informs others as well. So, and rather, again, in academia, rather than being necessarily prescriptive, what we can do, we can be simply descriptive. We can say, okay, here is what we are observing. Here are the questions. Here are the questions that we're hearing from investors or from entrepreneurs in Asia, in Europe, or in North America. And we can put this out and open up the conversations. So, for example, I did, end of last year, I wrote a paper on the developments in private equity around ESG, environmental social governance, which ties back to responsible investing and obviously ties back to some of the impact funds that had been raised in the 3 years earlier to it. And that has led to really critical conversations with investors, with private equity funds, but interestingly enough, also with regulators. So with the European regulators, with the American regulators, organizations like SASB. And that, again, to me, I think is a really powerful opportunity to be allowed to bring the right people around the table and to then basically put those questions or put some of the concerns back to a broader audience and to see basically how this can move the needle for the industry as a whole.
That's a good segue for what I wanted to ask you around ESG and impact investing. Given that you had followed the trajectory of the sector, if we can call it that, for such a long time, and given the recent headlines made by a lot of asset managers and investment firms raising even larger impact investing funds, I'm just wondering, what do you make out of all of this? What is impact investing in your view? How do you define, and how would you measure it? And what do you hear from the industry? How do people think about impact investing? Why is there such a huge demand right now? Again, I know these are a lot of questions, but we can take it from which point you want.
Let's peel the onion a little bit. So, I mean, firstly, I'm known to be reasonably critical towards some of the new investment efforts that are being made in this space. I think there's potentially a certain amount of wokeness almost around the topic. I mean, to me, kind of, sticking some additional pictures or some rainbows on your quarterly reports doesn't basically, and have some pictures of women working in a certain environment, is just not enough. So I think ESG as it stands right now has, and let me be a bit more controversial here, has the potential to be basically modern day snake oil. And what I mean by that is that it allows investment vehicles to say that their investments will, to some extent, change the world, for lack of a better word, but with very, very few standards or benchmarks to measure whether they're really on course to live up to their promises and live up to expectations of their investors. So I am a little bit concerned that we have raised a significant amount of capital in very, very large funds without much consensus around how we will measure the fact or the ambition of them to have impact on the larger economy. Now, let me also say I'm encouraged by the attention that the topic is receiving. On the other hand, whilst I'm not impressed with the way it's being related, the way it's being measured, I would like to see clearer standards to emerge. And that would ultimately then allow the whole industry to show that it's really on the right track and that it has impact. So the lack of standards and the lack of measures as we have it right now, and you asked about measure, and I wish I could point to one or two distinct measures that I like and that I would like to see everyone rolling out. But unfortunately, there are either, I could say there's so many out there that it's really hard to come up with a ranking. On the other hand, I mean, let me be very clear. I mean, in 2014, when we did a research report, a $200-300 million impact fund was a large fund. I mean, nowadays it's easy to point to several billion-dollar vehicles out there. So clearly, I mean, that's why I'm saying I'm encouraged by the attention that the space is receiving, because clearly there's a larger need to deploy capital in certain areas that may not live up to the expectations of a true blue private equity investor. But I also firmly believe, given how many LPs, how many investors I've seen asking for clearer measures, for clearer standards, I firmly believe that this will change within the next 18 months. So I think we will move towards at least a baseline of measures. And from what I can see right now, and I may be wrong on that, but I would bet that the kind of baseline will come from the regulatory side. That's not a very popular view in private equity. I mean, private equity has always been rather reluctant towards regulation, but I think there's a time and a place for regulation, and this may very well be it, where they provide a baseline. From this baseline, then individual private equity firms can iterate and can improve to the measures that are being suggested by the regulators.
But up to that point, and until there's like uniform regulation or regulatory view around impact investing globally, what is your recommendation for investors or for someone interested in participating in impact funds? Like, how should they think about those? What things should they look for to make their own mind whether this is indeed an impact investing strategy or just a relabeling of something else?
Yeah, I think as an LP, you have to, number one, be quite realistic. You have to basically set realistic targets for your own portfolio in terms of how much of your assets under management would you like to move into impact funds. Secondly, I think you got to do your due diligence. You really need to sit down with the GPs, with the private equity funds, and ask them, how do you actually drive impact within your portfolio? Because, I mean, let's be quite honest. I mean, as a private equity firm, given that you work so closely with your investee companies, you have a fantastic opportunity to really, really put some basic measures into place, and then over time, move your investee companies in the right direction. So I think there the LPs have to really make an effort to sit down and understand which GP is best aligned with the targets that they are setting themselves. So for example, I mean, I've seen family offices that focus very clearly on, for example, education at the bottom of the pyramid. So education, and the moment you narrow your target, your view, measurability becomes significantly easier than looking at a portfolio that has, let's say, exposure to 200 portfolio companies that are industry agnostic. So then obviously measurability becomes really, really complicated. How do you compare environmental impact of a manufacturing business with a services business, for example, or a SaaS company? Very, very difficult to come up with something that so you're sure you're comparing apples to apples. So I think as an LP, be very clear about your targets, be realistic about your targets. Don't be too ambitious. So, and then come up with measures and see whether you can find funds that align with your measures as best as you can. That's what I would do at this point in time.
That makes sense. Besides impact investing, what are some current topics or current developments in the private equity space?
Okay, what are some of the talking points in private equity, both in venture capital? So number one, I think the industry right now is learning to digest the kind of tsunami of capital that has hit them over the last 5 years, but continues to move into the private capital space. I don't see any reason why this wave of capital and this wave of interest in the private capital markets will abate. We see continuing wealth generation, especially in Asia. We see more interest from LPs, from institutional investors, that in private capital, which ultimately leads to larger funds, which ultimately leads to funds basically deploying more capital, but it also leads to more competition for investable and good assets out there, which then leads to higher entry prices. And if you think about it, and all my students will remember, I always say, like, private equity, it's a simple business. You buy, you improve, and you sell. So that's pretty much in one sentence what private capital is all about. And obviously, the entry price matters at that point. If you're buying an asset at 10 times EBITDA, it's a difference from buying an asset at 15 to 20 times EBITDA. So again, you need to do more heavy lifting when it comes to value creation. You need to find better ways more consistent ways to make companies better. So it remains to be seen. I think the challenge for the industry right now, and that applies to both private equity and venture capital, is can the private capital space deliver the same kind of returns in the next decade that they have delivered in the past decade or even the past 2 decades. So the LPs, the investors right now, are spoiled and their expectations are high. Why? Because they're anchored at reasonably past high returns from the past. So we will need to see whether the industry can deliver and satisfy the expectations of their investors, because it's as much about expectations as it is about reality.
So do you think, is it like operating experience and really delivering more than just capital the key, as you alluded to at the beginning?
Yeah, I think so. I think the days of the early leveraged buyouts, where you brought a little bit of capital to the table, you leveraged it up, and then you basically rode the company all the way to exit. I think those days are long gone, and I think most private equity funds would agree with that. So, being a pure financial investor without any value attribution beyond capital, I think is a hard argument nowadays to raise money around.
That's interesting, because I think some, like, side note, in some geographies like the US, where the market is so super sophisticated, you would expect that. But it's interesting to see that permeated across all regions. So there's no room for private equity 101 in either region.
No, clearly not. I think especially here in Asia, I would say, where private equity, especially growth equity investors, so minority investors in fast-growing companies, are more often than not the first external capital that comes into, let's say, a family business that is trying to grow and to expand. Those firms are usually quite profitable. And what they're looking for is much more a partner that can open doors for them in a different region. So take, for example, a Southeast Asia champion that is now deciding to expand into Europe, and expand into Germany, expand into France, and is looking for a partner that can come in and yes, potentially bring a little bit of capital to the table, but more importantly, open doors in Europe for them and bring relationships that the founders or that the family just does not have. So I think that's very clearly what's playing out and has been playing out here in Asia for a long period of time. So the value attribution of private equity is really much more to improve the company, open doors for the company, improve governance structure inside the company, so that company can really play on an international playing field.
So on that background, how important is being local and having this regional knowledge, like being on the ground and being maybe having, key team members from the region?
Yeah, I think it's super important. I mean, I think it's always been super important in Asia. I think the fly-in, fly-out model that has been attempted many times has rarely worked out, if ever. So having what we call so nicely boots on the ground really, really matters. Again, it goes back to a comment I made earlier on that really, the way I see it, there is no such thing as Asia. I mean, you cannot think of Asia as, for example, the United States, which is a reasonably homogeneous space with 350 million people. That doesn't exist here in Asia. There are very much distinct differences between Singapore, between Thailand, between the Philippines, China, India, and so on. And I find it's really, really hard to execute on some of the value creation that we just discussed without experts on the ground that understand and know their way around in the respective jurisdiction.
Mm. I'm switching a little bit perspective, maybe towards one of your MBA students or someone who is using business school to get into the industry, to transition to private equity investing or venture investing. What sort of advice do you give students in such situations, and what should they look for when they try to decide on a target firm to join?
Yeah, that's a good question. I think it's really important, given the nature of the business model of private equity and venture capital, that you really only get a good leverage or get a good value out of it if you stay with a firm for a sustained period of time. So I think it's really important that you understand what the focus of the firm is. What is there? What do they bring to the table? What do they focus on? What kind of investments do they like to make? What kind of firms do they like to work with? This could be regional, this could be by industry, this could be by the stage of the firm. And it's super important for the student to make that decision and be very, very clear about it. It's very, very hard to generalize in private equity as well as in venture capital. Each fund is very, very different. And very often the tone is being set by the founding partners. So I think it's really, really important to understand what the industry likes to do, what that fund focuses on, and whether that's something that you really align on. So, for example, if you are interested in impact investing in a specific jurisdiction, then let's try and find a fund that really, really understands that and really is focused on that as well. So that to me it's much more about the students understanding where they basically want to move into. On the private equity side, I mean, you could say, okay, look, I mean, I want to learn how to do deals. I would like to learn how to run models, how to do valuations. Then let's find a role that does exactly that. So don't go into the fundraising role when you're interested into the deal making role. So I think it's as important for them to understand where they want to focus on, as well as it is to just basically get yourself out there and start networking with the various funds. It's easier to make those decisions, though, once you're part of the industry, which makes it a little bit kind of like the chicken and egg question, right? How do you become part of the industry and make a reasonable choice? So what I see quite often, I mean, a lot of our MBAs join private equity or venture capital about 3 to 4 years post-graduation. So they may go and work with corporates within a corporate environment. They may work with an investment bank, with a consulting firm, and then basically make the transition into an investment fund. On the venture capital side, I'm a firm believer that it really helps having been an entrepreneur yourself, or at least having been in a position where you were allowed to grow, to scale a business with P&L responsibility, with hiring responsibility, and so on. It will make you a much more empathetic investor when it comes to sitting on the other side of the table.
Hmm. I'm switching again perspectives, and I'd like to speak more about your motivation, and also maybe, has there been a point where you considered becoming a practitioner full time versus keeping staying on the academia side with some insights into the practitioner side? Did you want to be an investor full time at some point?
Yeah, I mean, I do get asked quite regularly, and and who knows? I mean, what I don't know, Claudia 3.0 will look like. I really don't know. Nevertheless, what I appreciate right now is is the ability to be neutral and to bring a certain, if you like, devil's advocate attitude to the table. So, and that basically requires that I remain neutral, that I remain basically not attached to one specific firm. Should I do that, it would close the doors to a lot of conversations. And I have to say, right now, I enjoy my plural portfolio. I enjoy the fact that I'm involved in just so many different conversations on a daily basis. And that really, I mean, it gives me a certain amount of energy. And I think it also makes me a much more viable and much more valuable counterpart for those funds, for those professionals that I work with.
On all that background, what keeps you motivated? And what is like your long-term vision, your long-term motivation for yourself?
Yeah, good question. So I basically, I like to, I get excited about building and fixing things. I like to see business. I like to help businesses grow. I like to help individuals grow. So that really excites me, and I think it's no surprise. Nevertheless, I mean, I also enjoy working with turnarounds. But again, usually that means they have hit rock bottom, and we can start basically picking up the pieces and starting to put things back together again. If I don't engage with kind of new ideas, I think my thinking and life in general would become stale very quickly, and I would really like to avoid that. I mean, plus, I mean, let's not forget. I mean, back to the VC and to the tech side, the world is changing so fast. So I really would like to stay close to those new ideas, how crazy they may sound today. In 4 or 5 years' time, they may very well become something that you and I are using, a product we're using, a service we're using. And I really, really appreciate that. So, for example, I'm quite excited right now about anything that's happening in the biotech space and space tech, but also very much in healthcare and health tech as well. Those are areas that really excite me right now. And I think the best way to be kind of on that cutting edge and having those conversations, inviting those conversations, is to be involved either as an investor, be it like I do as an angel investor, or as an advisor, and kind of watch those companies execute on some of those ideas. So to me, this is really exciting. And that kind of, I think if you ask me what keeps me motivated, that really what keeps me motivated. And I have to say my MBA students clearly give me the energy to keep this going. So.
What are some high-level lessons learned across your career? And we did a quick check earlier in the conversation, but the question is more like, what is something you now know that you wish you knew much earlier?
Okay, I think it's that's a good question. So I think it's the concept of no regrets. I think whatever decision you make in life, I mean, have a look at the different options on the table, by all means. Circle the wagons, but at one point you make a decision. Once you make a decision, basically all systems go down that one particular path. You learn as much from good decisions as you do from bad decisions. You learn as much from good bosses as you learn from bad bosses, to keep it simple. So I think it's really, really important to ensure that you are there when the calls come in, that you pick up the phone, and that you make those decisions wholeheartedly and quickly. And I appreciate it's easier to do that when you are like I am, basically an empty nester, and it's between you and your husband potentially and your partner, than it is when you have children. So there are different phases in your life where this may be easier than other phases. But overall, I think it's really important to make decisions. I think what's also important, though, on the other hand, once you're part of an industry, once you're part of a job, it is really important to, at times, take a step back and have a look at where you are. And there, again, I think the model of academia makes that significantly easier, because there you have the opportunity to take time off, take a step back, take a sabbatical. Nowadays, we have companies as well that encourage senior executives to take sabbaticals, which basically allows you to take some time off and just gain a little bit of perspective. Put your phone in the drawer, don't turn your media on. So what I do, for example, every year I do a digital detox. I started doing that 6 years ago, and I have done it ever since. So what that means, I try to find 2 or 3 weeks, sometimes 4 weeks, where I literally turn all my social media off. I turn all my emails off. I don't respond to emails. I have a out of office reply that says very clearly that I will be out of office for the next 2 weeks. Your email will not be read. So when I come back, I'm not going to rifle through, thousands of emails. I mean, what's the point? I may as well not go on vacation, right? So if you need to email read, please resend it after the 15th. So, and that basically, I have to say, it's fantastic. It really, I usually at that point also, I don't read the news. I try not to read newspapers. I will read, but I will read on my Kindle, and I will read books in hard copy that I have downloaded beforehand. So I think what those opportunities do, they give you a chance to kind of observe what you've been doing. I'm a big fan of Marshall McLuhan, who already in the 60s basically said that sometimes you have to become eccentric to see the center, and eccentric in the sense to just take yourself outside, a little bit away from what you're doing on a day-to-day basis. And I find that's really, really important. Super hard to do nowadays, especially if you're really plugged in and if you're firing on all cylinders, you will like what you're doing. But there's real value in taking time off, taking a step back, and really turning off those phones and social media and all those incoming requests that you're having.
Is there a book that had an impact on you?
I like to read. I do read a lot, and I really have no particular, let's say, focus in my reading as well, or I don't select against books. So I like to, if I look back at what I've read, all the books all my life, I wish I would have kept the list. That would have been a good list. But I see it more like a puzzle, and the books like the pieces of a puzzle. So I'm not sure if it would be fair to say like one has been particularly interesting or that kind of shaped my thinking. I mean, maybe we just look at over some of the recent ones that really, I think, shaped what I dove into. So one is Sandworm, that was written probably about 2 years ago. It's a fascinating insight into the world of cybersecurity and cyber risk. As I'm doing risk management as well, to me, this was a real eye opener, as it was a book that was written by for non-tech people, as I am. And what else? I just reread over summer. I reread Moneyball, which is really an old book, but it's kind of a cool story. How I don't know, a bunch of geeks kind of got their hold on the sport and kind of revolutionized how baseball basically was, how math changed baseball. I thought it was a fascinating story. It's definitely one, and it reminded me that I should put it on my reading list for my MBAs. It doesn't quite relate directly to private equity and venture capital, but it's just such a fantastic read. So I should head nod to Michael Lewis. I think all of Michael Lewis's books are probably worthwhile reading. So, but that's kind of like, it's probably not fair to point those two books out, because there are plenty of books that really have at one point or the other kind of shaped the way I think, or given me food for thought. So.
Hmm. Do you have like any parting thoughts? Anything I didn't ask you wish to share?
I think parting thoughts. So if I look at the world as it stands nowadays, and as I spend so much time with entrepreneurs, I think what's really important not to forget, with all the noise around venture capital and also private equity out there, I think there's never been a better time to be an entrepreneur than right now. So I think anyone out there with entrepreneurial ambitions, I would say, whatever you have in mind, whatever you've been mulling over for however long, I think it's time to step out and really basically grab the bull by the horn and just take the plunge. So it's easier than ever to start a business. It's easier than ever to start a global business from wherever you are in the world. And it's easier than ever to actually find some investors that probably will, find some interest in your ideas and invest in your ideas and, your even kind of very, very early PowerPoint presentation. So I think it's a fantastic time. So I hope we will see a lot more young people start in, and experienced people as well. I mean, there's no reason why you shouldn't, as a senior executive, take a step back, that we're living longer, we're working longer nowadays. There's nothing wrong, and investors actually really, really like to invest behind experienced entrepreneurs. So, if you see an opportunity, if you see a lack, you see something that is needed, and just do it. That would be my advice.
I love the call to action on that. And then final thing is, if anyone listening feels they want to reach out to you, what would be the best way to do that?
Oh, okay. So that's a good question. So send either by email or via LinkedIn. And maybe just one comment on that. I'm really allergic to people just asking for random coffee chats. Why? Because I think they're just not particularly efficient. So maybe I'm very German in that. So I like people reaching out and saying, I have 2 questions. Can I have 20 minutes of your time? And then basically relate the question to me. So send me an email, send me a LinkedIn invite, but please have your questions ready, not just random coffee chats.
Fantastic. I love that. Thank you so much, Claudia. It's been wonderful to speak with you. And thank you again for making time. I'll link your email and LinkedIn and all the other resources we mentioned in the show notes for anyone interested.
Absolutely. Thank you very much. So really looking forward to seeing and hopefully getting some questions back from your listeners. Thanks very much, Andreea.
Thank you.